But Mayuresh Joshi of Angel Broking is also with us, and we've been talking with Ashwini Gujral and Sudarshan Sukhani. Mayuresh, good afternoon. Let's talk about the stock of the month, or the last few days actually. Tata Motors, it's up 22% now this month. Do you think it's good for more?
Afternoon, Anuj, probably. And again, I think the fall that we witnessed in the stock over the past few days and weeks, it was more to do with the kind of selling that one really saw. But if you look at the numbers that are coming through, ex-China specifically for JLR, the numbers have been extremely encouraging. So in that sense itself, the platforms that it is introducing, the kind of EBITDA margin that one really expects, we still expect EBITDA margins to be a little bit low and muted. And that is more to do with the kind of launches and the ad spends and the depreciation expenses, which would turn out to be higher, along with the amortization which will come through. But clearly, I think if you're looking at a time horizon of more than 2 to 3 years and investors holding on to the stock, our own take is they should continue holding on to the stock. And even the domestic business is shaping up pretty well. So I think domestic contributes minuscule if you talk about the overall revenue part, the contribution to profitability. But the CV business is showing signs of turnaround, and even the kind of launches that one really expects to come through on the PV side. I think that is an encouraging trend even on the domestic side. So I think it's a clear hold from our side, from investors holding on to the stock at lower levels.
Okay, so clear hold on Tata Motors. That stock has risen 40% from its 52-week lows, but the market is actually threatening to break into the red now, so just keep an eye out on that. In fact, the Nifty has lost more than 60 points from the highs of this trade. 75.83 was the high, and now we're back at 75.20. And the stocks that are really causing some trouble now is TCS. Just look at the intraday chart of TCS. That one is at the lowest point. It's down about 1% and HDFC as well has sunk to the lowest point of trade. So there are some heavyweights that are dragging the markets lower and preventing the market from getting above that 75.50 zone.
Yeah, I think HDFC is a problem for the market, Sonia, clearly, because it has huge weight also in the index. If you see the contribution plate, TCS would not have impacted it much. I mean, it would have also had a play, but HDFC clearly is more 100% free float stock, so the entire market cap gets added to the weight, and that's why it's down. Also keep in mind, technically that Coal India drag of 8 points is technically meaningless because it's gone ex-dividend, so not too much of a difference. But otherwise, the kind of decline that you're seeing right now on the Nifty is telling you that it's a bit of a sideways move right now. Ashwini, for last 2 days you've been suggesting both intraday buys and sells. So is this any kind of indicator of a market which could be turning, or is the overall trend still on the positive side?
See, as long as we hold on to 7400, we should hope that we'll again restart the uptrend. Now selling and buying, these events when they start happening, it's a narrowing market. At 7440, you will see the opposite action happening. People start buying. So once the market is kind of narrowing after a huge range expansion, actually in terms of the number of points we gained, we probably did 3 weeks worth of rally in 1 week. So now you'll have to go through such periods where the market builds a fresh base for the next upside. So I don't think till 7400 holds on, there should be any problem. These kind of declines, because people got stuck in the morning above 75.50, those longs are now getting wound up. I won't really worry about this sort of a decline.
Okay, so don't worry too much about this intraday decline. It's bound to happen considering the market has rallied so much. So let's talk about slightly medium-term views then. Mayuresh, you were telling us your view on Tata Motors. The other two stocks that have given you very good returns this month, one of them is Maruti. It's about a 13% gain already in the month of March, and ICICI Bank is back above 220. What's your call on both these names? Would you buy into either now?
So again on Maruti, Sonia, the scenario is how the numbers pan out, and Q4 numbers should be out over the next few days. What happened in Q3 in terms of their inventory built up, in terms of how the margins got compressed, the kind of currency movement that we've seen of the yen against the dollar, that would have some amount of impact, and it will be very interesting to see of what really pans out in terms of how the EBITDA spreads out for Maruti. In terms of their own spread, in terms of product mix, I think extremely difficult diverse company, very strong franchise. But clearly, I think I'll wait for numbers on Maruti to come through on Q4 before we largely take a call on the stock from a medium-term perspective. When it comes to ICICI Bank, I think our view has been pretty consistent on that one. After the sharp correction we've seen, I think the clutch of larger private sector banks is something that we've always recommended. And again, I think the whole logic and rationale behind ICICI Bank, HDFC Bank, Axis Bank would be the kind of strong earning momentum these banks would be able to exhibit in FY17. They'll be working on a low base. You're probably going to see huge amount of expansion happening as far as the credit growth is concerned. And if the rate cuts of RBI come through as the market is really expecting, because the government has stuck to its consolidation path, these banks with good capital adequacy ratios, with good spreads already on their balance sheet, with a lot of concerns related to their asset quality in the price when they're corrected significantly. Our own take is that over the next 12 to 18 months, a clutch of these larger private sector banks, including ICICI, should do well. And again, from a valuation perspective, the forward multiples have contracted meaningfully from the peaks that we had witnessed. So even that amount of headroom is available in terms of a valuation perspective when it comes to the larger private sector banks.
Okay, that's on ICICI Bank at 220. But Sudarshan, before we take a break, one could argue that for last 2 days you are making money by selling the gap ups as well. Would that be a cause of concern, or would that be an indication of a market which might be giving you a bit of a warning sign in terms of maybe booking profit, or just even taking an adventurous shot? Is that something that you will read into the data right now?
No, I was not really. See, it's just a matter of chance that markets opened higher and went down, and that's all there is to it. We need price levels need to be taken out for us to read a message in the price, in the market movement. So far as let's say 74.50 is a base, and if that level holds, then these gap ups are giving some nominal, and they are random. It's not a sure trade that every time it gaps up we sell and we are going to get money out of it. I doubt that. So I would say that it is price, but today's price action, at least for short-term traders, is that if you see 7,500 on the downside, get out of your short-term positions.
Okay. By the way, just one more point that I wanted to make, Sonia. Keep an eye on the market breadth. Because for last 2 days it's starting at about 3:1, but through the day it's deteriorating. In fact, right now as we speak, it could well slip in favor of declines. And one of the stocks which really you should watch out for now is Crompton Greaves, because a lot of people might be tempted to now actually take money off and not wait for that demerger or whatever. Look at the intraday chart of Crompton Greaves. That stock is almost trading at low point of the day. So let's do one thing. We'll take a break on that note. Up next, we'll discuss some long-term ideas with Pankaj Pandey of ICICI Direct.
I'm not saying that the fortunes have changed in favour of the board. I think where we were from 2 months ago is that the fears about a global recession have ebbed away, and we're now thinking maybe that's more of a kind of a concern over a profits recession where valuations get taken down. Our markets had fallen quite sharply along with global markets, and it's just a rebound from there.
Well, that's the word coming in from ICICI Securities. Ultratech Cement, Voltas and Lupin are the top picks that they have identified for a long-term investor. But there's some news on MIC Electronics as well. The consortium has won a 2,000 crore order from Rail Tech Corporation. So that stock is just a 20 rupees stock, so keep that in mind. But the intraday chart will come up for you. A big surge is what you're seeing in MIC Electronics currently.
It's interesting because this order looks fairly large, I mean, Sonia, and it's consortium. So we'll have to find out how much is the share for MIC Electronics. I mean, just to put things in perspective, the full year revenue of the company is 150 crore. So, we don't know what kind of timeline we're talking about and which are the other companies, but this looks fairly large in terms of the overall order, and you'll have to find that timeline as well for this order. But as of now, that's all the details that we have. 14% higher on the stock right now. 2,000 crore order is what we have on MIC Electronics. So that's all the details. right now. Anything else that you can spot?
No, in fact, I'm just going through the press release and they don't give any indication of what the timeline will be. All they're saying is that the proof of concept will be conducted for the proposed network for 6 months at Vadodara, and the final work order will be issued on evaluation of that proof of concept. So the MIC, the MIC consortium has been selected for a proof of concept phase currently. So it's in the very initial stage right now.
I think we'll take this flash off. Clearly, this is the cost of around 2,000 crore for the entire project, out of which they'll be doing a phase, and this order is a part of that. So it's not that this order size is worth 2,000 crores. So, but the stock is doing well. So that's MIC Electronics is what we have at this point in time. Okay, let's just quickly get a couple of chart checks before we move any further. Ashwini, a word on this. A couple of these cement names. We were just discussing Ultratech, but Ultratech has done well, and I also wanted to check on ACC as well.
See, Ultratech remains looking play in cement. Overall, these aren't great trading stocks, basically range bound type of stocks. Upside on Ultratech is probably 3350, so downside find support around 2500. And upside the range is around 3350, but it's kind of a play which moves once in a while, so we are not really great trading stocks. In terms of ACC, again big decline from 1770 down to 1200, so maybe in a good market you will find 1350, 1360, but nothing significant here.
Okay, stay on guys, since the market has quietened down now and is up just about 21 odd points. Let's talk about some corporates. M&M, Mahindra & Mahindra, forayed into the agricultural equipment rental services today with the launch of Tringo, which is their new app. Here out Rajesh Jujurikar, the president and CEO at M&M's farm equipment business, in conversation with CNBC TV 18's Farah Bukwala.
This is going to be a new startup, a new company, and while I'm not going to be able to give you the exact number, it's going to be double digit crores, which is upward of 10 crores as an initial period. The initial investment will all be done by M&M, and over a period of time, we may, as we stabilize the business model, look at bringing in partners or private equity.
So you are basically looking at two business models, the primary one being a franchisee-based model and the other one being an aggregator-based model. Can you help us understand the nuances of both and also help us understand the profit-sharing ratio between the franchisees and Mahindra & Mahindra? So we want to understand as to how Mahindra & Mahindra seeks to benefit from this model as well.
Okay. So firstly, the franchisee model is one where Tringo, which is the brand, will appoint franchisees, and franchisees will have hubs under them. The idea is to be as close to market and have new products, which are either tractors or implements, owned by the franchisee, where the franchisee buys them. The relationship between the company Tringo and the franchisee is one of a fixed fee plus a variable commission. Right? The transaction between the farmer and the franchisee is a separate transaction, not connected with the company. Right? So what this company gets back is a fixed fee, almost like a royalty model, and a variable commission on hours used or usage of the product.
And under the aggregator model?
In the aggregator model also we will route it through franchisee. So while we will do the aggregation using our apps, but the revenue streams will go through the franchisee.
Alright, our closing bell money control question of the day is: ICICI Bank is up 15% this month, 16% now actually, counting the latest gains. Can the rally sustain from here on? Log on to moneycontrol.com and post your responses, and we'll read some of the most interesting ones post 3:30.
And up next, it's Monday, so we have our Monday special Mid-Cap Mania with Nigel D'Souza, and the stock on his radar today is from the metal space. The company has no debt and a huge cash pile with a strong promoter. Any guesses? Well, Nigel will give us the details on the other side.
Well, the market has again moved up, and clearly, I mean, if you see the intraday chart of the Nifty, it's required 3 or 4 minutes for Nifty to claw back, whatever it lost between say 10 a.m. to 3 p.m. That's been the kind of market that we are in right now. Not quite yet at the highest point of the day, but still back to 75.50 is what we have, and a couple of stocks which stand out right now. For Sun Pharma is taking the market higher a bit. I mean, it's still in the red, but in the last 10 minutes of trade, we have seen a bit of a rally in Sun Pharma. Lever has moved up a bit, so that stock has also looked quite okay. ITC has moved up actually. If you see ITC intraday chart, that stock is trading at high point of the day, and HDFC is trading at high point of the day. It's still in the red, but if you see the contribution plate now, it was leading to quite a bit of downtick in the index. That's gone now. It's only 1 rupee in the red now. For HDFC, could well break in the green at any point. So looking quite interesting. Ashwini, again, not to read too much into this, but in 10 minutes we have seen a fairly decent move on the Nifty.
Well, I was remembering your good friend Mario, because from 75.50, this time we haven't probably gone to 74.50. So maybe, slowly the dips from 75.50 are becoming shallower, and sooner or later, we'll get past 75.50, but that's what is probably playing out, that, buying is coming back at higher and higher levels. We'll have to wait and see. Let's wait for 75.50, 75.70 to cross decisively.
Okay, let me add a mutual friend, Ashwini, not just my friend. Yes, we've been referring to it quite a while and quite a number of times. But anyway, let's move on and get to Nigel, because it's Monday, and our Monday special Midcap Mania with Nigel D'Souza is here, and the stock on his radar is from the metal space, has no debt and a huge cash pile with strong promoter. Nigel?
Well, Anuj, I track the metal space very, very closely, and most of my companies, they have a lot of debt in their books. So the three big risks really that investors always talk about is high debt, ownership wars, and in fact global prices as well have been declining, though in the last 1 month it started moving up. So I was looking through a lot of these stocks, and one such stock that caught my eye was Tata Sponge. I'll tell you why. Because the cash in its books is equal to nearly around 70% of its market capitalization, and it has no debt whatsoever. So the cash as well as the current investments are nearly around 500 crores odd at the end of the last quarter, and the current market cap is around 700 crores plus. The management has also said numerous times that they're hopeful of recovering some money, because one of their coal blocks were cancelled in September 2014, and they're expecting close to around 180 crores. With that, they're expecting interest as well. That could be a tad bit too optimistic, but if you put the 500 crores that they have, and if in case they get some part of that 180 crores, then it will look even better. Now, importantly, also they have been paying a dividend over the last few years, and their track record is very, very good. In the past month or so, the stock has ran up, because when I initially started looking at the stock, in fact, at one point of time, the cash in their books was equivalent to the market cap as well. But in the last 1 month or so, the stock has ran up close to around 25%, though from its peak, it's down close to around 48% approximately. The promoter group though is strong as well. It's a Tata Group stock. Tata Steel holds nearly around 55% stake in the company. Now, to give you a few more points on the company, Tata Sponge is currently functioning. It has been functioning at 100% capacity utilization. The rest of the sponge iron industry has been functioning at around 50% approximately. Now, they've been getting all the iron ore, most of it coming in from Tata Steel. They're importing their coal requirements as well. So in terms of the raw materials, they're fairly secure. The power division as well has been helping them report a positive EBITDA number, and in fact the MIP coming into existence has led to prices moving up as well. Finally, the company has managed to stay profitable even in tough times, though as per the 9 months ended this year, if you compare it with last year, then it's not looking too good. But you need to put that into context as well. 9 months numbers not looking too good, though we had the management who joined us just in the last couple of weeks, and he was sounding fairly confident. So interesting stock. Back to you.
Okay, Nigel, thanks so much for that. Well, let's get an insight into the dealing rooms as well. Nimesh Shah is here with Trader Talk. Nimesh.
Hi, so the market, the Nifty and the Sensex is pretty much sideways, but there's a lot of action in the mid caps and small caps, and that's the space where it's larger interest of late. In fact, now I'm told that even the domestic funds are looking to buy some of the select mid caps and small cap stocks. So clearly the sentiment has clearly turned towards the mid caps and small cap space. As a lot of the technical analysts have been pointing out, 7550 is a level to watch on the Nifty. If that is taken out, a lot of dealers believe that this expiry could be around that 7700 or 7750 mark. So there is still more upside left, and that's a large play which a lot of the dealers are playing out for. Clearly, from a from a positioning point of view, a lot of dealers believe that it's better to buy at dips rather than sell on the rally. So that's the clear orientation, and with the focus on the mid caps and small caps. Even from a flow perspective, you've been seeing that of late the FIs have been net buyers, and that's a global risk on which is playing out, and India is a beneficiary of that as well. There are two large events which are going to have a bit of a near-term say, which is the Fed outcome and the BOJ announcement. So both are expected to be positive for the global market. So the broad sense is play with you have a stop loss, but clearly the orientation is on the long side, and the focus is clearly shifted to the mid caps and small caps.
All right, Nimesh, thanks a lot for that. Yes, so the mid cap index has also moved back into the green, and that advanced decline ratio, it looked like it would go in favor of declines. That hasn't happened. That line didn't crisscross. So it's still very close to crisscrossing. It can do that, but still the fact that from lower level, again the gap has widened a bit. So at least there's comfort for the traders that dips are being bought. Yes, the rallies might be getting sold, but the dips are getting bought, and that is a positive bit. Let's get the BTST ideas then. 17 minutes left for markets to close. Ashwini, what are you buying?
See, Sun TV is looking excellent, probably is backed by some news. So that's a buy with a stop of 358, target of 375. Jet Airways is a sell with a stop of 531, target of 510, probably a counter trend trade to KN. And LIC Housing is a sell with a stop of 461, target of 440.
Okay. Varinder is also with us. He'll give us a couple of buzzing stocks that he has observed now. Varinder, over to you.
Look at Prism Cements. In the last 5 minutes of trading, that stock has spiked up by nearly 8-9%. Crompton Greaves is now trading at a high point of the day. All this thing happening in the last 5 minutes. Also, Dhampur Sugar is another stock which is moving up. But otherwise, all the jute stocks are moving up today. So it's Ludlow Jute, Gloucester, Cheviot, all are up anywhere between 5 to 10%. It's a day actually which belongs to mid-cap IT space. So you look at Sasken up 20%, Mastech, Majesco up anywhere between 5 to 10%. Geometric Software is buzzing today. RF Software was up 7-8% last time I checked. Intrasoft Technology is also moving. Some of the T stocks like Harrison Malayam, BBTC, Bombay Burma, Jai Shri Tea are also moving up. If you're looking at some of the small cap stocks, watch out for Shirpur Gold, that was up 20%. Lambhudra Textile, Thirumulai Chemicals, that stock has been gaining since last few days. Dynacos Technologies, Kiri Industries, Shariar Industries, Sham Star Gems, KGD, Umang Dairy, Cupid again moving since last few days. ABC Bearing, Intense Technologies, Cerebra, GS Auto, IG Petro, Sunil Healthcare. Some of the losers, however, are like companies like Visagra Poly, JP Infra down 6-7%, Mukta Arts after a huge run up seeing some profit booking, Tara Jewels, Pioneer Industries and Pioneer Distilleries.
All right, Varinder, thanks a lot for that. Well, amidst all of this, the stock that's hit a new probably life high is Dwarikesh Sugar. This really has been the stock to watch out for, as Mr. Tulsian was also pointing out. Look at the phenomenal move on the stock right now. As we speak, it's locked again on 10% circuit. The circuit limit has been revised down, of course, now from 20 to 10%. And look at that 12-month chart on Dwarikesh Sugar, 639% higher. This really has been the stock of last 1 year. And this in a market which hasn't done too well over the last 1 year, 6-bagger is what we have for Dwarikesh Sugar. Tahir Basha is also with us from Motilal Oswal AMC. Tahir, hi, good afternoon. So the last month has been good for the markets after the kind of year that we have had. But do you get a sense that the market is still ripe for more short covering, more gains in the near term?
Well, I think the market movement, to my mind at least, will be kind of linked to what happens to commodity prices, and I think some bit of stability that we have seen in commodity prices is positive, and probably if you were to see some more gains in commodity prices from here on globally, then I think that will act as a further booster for the markets, global markets as well as our markets as well. So quite a lot of the pain that we have seen in the markets has been directly or indirectly a result of what's happened to the commodity complex at one end of the pendulum. I think some bit of stability out there is something which is warranted, and will probably it may consider to be or construed as a short-term negative for India, but I think more than the negative, there will be more positive outcomes as well out of that. So I would kind of keep watching what happens in that area, and that is something which will probably set the mood for more flows coming in. We've seen some improvement in flows as we've seen. Maybe again further going forward, it'll probably even further flows will depend on how commodity prices move. So I think that is one factor which will kind of be important and will act as a trigger for the market either ways, up or down.
Okay, well, you must look at the Crompton Greaves stock now. In the last 10 minutes, there's a spike on that name, not just on the stock. The March futures is buzzing as well. As we've been telling you, today is the X date for the demerger, so it's the last day to be eligible to get the consumer business shares, and now that stock is surging away, up almost about 9%.
Tomorrow is the X date. Today is the last day.
Today is the last date, yeah.
Tomorrow is
so
the
X date.
Tomorrow is the X date. So tomorrow the adjustment will take place. All the current contracts will get expired today. So that's quite interesting, Sonia, because you still have a bit of a difference between the spot and the future. So that will be based on the last 30 minutes of trade. That adjustment will be made, and you'll have the settlement accordingly. But 900 crores of turnover, and tomorrow fresh contracts will be issued for Crompton Greaves, depending on where the stock moves.
So today is the last day that you can be eligible for the consumer business if you buy into it at this point. Tahir, you want to come in on this, because this has been the focus of the market for a while now on Crompton Greaves. What would your view be?
As a disclaimer, we don't really own the stock in the portfolio, but I think some of the recent developments again around the stock have been kind of positive. I thought they being able to restore back the deal for their international businesses, that is something which has been received well by the market, and I think there is new management as well, especially for the consumer side of the business, so that will be interesting to watch at a later date, how it shapes up in terms of growth as well as profitability. So and clearly it's coming down from a very beaten scenario, so that's probably causing the excitement around the stock. But otherwise, apart from that, no great views. Like as I mentioned, we don't even hold the stock in the portfolio today.
Okay, Mayuresh, you want to give your view on this? Would you advise investors to buy the stock now, or what would the long-term view be?
Again, it's a hold, Sonia, from our side. If you look at the sale of the TNT division that Crompton has done, it's a long-term positive, and once the sale proceeds come through over the next few quarters, the company is looking at a debt-free balance sheet, specifically on the industrial part of the business. The residual part of the business, that is the domestic business that is left and the automation business that is left, they are trading at positive EBITDA levels. So I think the operating margins there are quite sustainable going forward. So you'll definitely see an EPS upgrade on that count. On the consumer business per se, the business has been doing exceptionally well for Crompton Greaves. It was the industrial business with losses on the TNT part and the system part, which was dragging the consolidated profits down. So I think the entire demerger is a huge positive for the consumer business of Crompton Greaves. Again, I think the valuation pecking theory of it trading lower and the valuations being cheaper than Havells, I think over the longer period of time, our own take is that the consumer durable business will still continue doing well. And with that going off, the industrial business should do well as well. So I think it's a hold from our side on Crompton Greaves.
Okay, let's run those graphics again, because this clearly is the stock of the moment right now. And for those of you who are still wondering, whether you still want to get in with last 10 minutes, those two plates should explain. The X demerger is tomorrow, so tomorrow the stock will adjust. It could be anywhere between 100 to 120 rupees per share. The previous bit on that you'll see. So that is, of course, that call that you need to take, whether it gets listed at whether it gets traded at 100 or 120. What left after this would be the standalone business, which could again be valued between 40 to 60 rupees per share. So what we're talking about right now is, from the analyst point of view, the best case scenario could be 180 rupees per share of the combined value, which right now is available at 155 rupees, but then it could be 140 or 150 as well. So that's the call that you need to take, whether you want to go in and buy Crompton or not. But tomorrow would be the X date for Crompton Greaves. So that's what we have on Crompton right now. In fact, Varinder is also with us. He has also done some numbers crunching. So Varinder, what are we expecting tomorrow for the business X of this business? What kind of number are we looking at?
155 is the current market price. It's a simple SOTP analysis. As you rightly said, the consumer business, remember there was an open offer which came at 95 rupees earlier. 6 months you got to add interest also, hence the market is expecting that the consumer durable could be around 110, 115. Now what is left over, the international power business they already sold, which has been reported. Now the domestic power and industrial business is important because that's the entity which will be listed tomorrow. FY17 expected EPS is 4 to 5 rupees per share. A debt-free company, and now you can put your price earning multiple, whichever way you have to put it out. Havells trades around 20-22 times in the domestic T&D business. ABB Siemens is around 40-50 times. Even if you take a conservative of 10 to 15 times, the value comes anywhere between 50 to 60 rupees. So if it's 110 rupees for the consumer durable business and 50-60 rupees for the domestic power business, which is expected to grow as per the management in the con call clearly said that the margins will improve from that 4% mark what they have been, and they are clearly seeing some order inflow coming in over there. So if that EPS has to grow from even 5 to 6 rupees and you have to give it a inline valuation of Havells, then it could be anywhere, but 160 to 170 was the base for a collective business, and only for the domestic it was around 60 rupees, which is being reflected in the price.
Also keep in mind, a lot of this, as Varinder pointed out, is the market dynamic as well. The market is different from what it was last month. Last month you would have given much lower valuation. Even stocks like Havells, for example, have rallied. Voltas has started to rally a bit. So I mean, there are a lot of stocks which are rallying right now. So you got to keep that at the back of your mind. But stock could well be trading closer to the high point of its potential right now in terms of SOTP valuation. Of course, we'll not take technical chart check on this one because tomorrow charts will change for this with the kind of adjustment that will take place. But that's on Crompton Greaves. The market has become very volatile. Again, if you see the intraday chart of the Nifty and the Sensex, it's a lot of stocks where you've seen intraday declines. Larsen and Toubro clearly stands out. Larsen and Toubro is now dragging the market quite a bit in last 5 or 6 minutes of trade, now trading at low point of the day. Mahindra and Mahindra is a bit of a drag. That stock is now trading at low point of the day, and Kotak Mahindra Bank as well is a bit of a drag, again trading at low point of the day. Sudarshan, a chart check on Mahindra and Mahindra, it's a bit weak considering that the market has gone up so much, but this month the stock is still down about 1.6%.
No, it's down and it's not performed as well, but the charts are quite attractive. So for a long-term buyer or even somebody who's willing to buy for say 3 months or and more, M&M is a buying opportunity.
Okay, well, there are a couple of stocks on the upside as well that are moving quite well. Corporation Bank, the intraday chart should come up for you. It's moved to the highest point. It could just be a trading pop, but the volumes are surging on Corporation Bank now. Prism Cement is another one from the cement space which is looking quite good. That stock too has moved to the high point, up almost about 8% And Majesco, that one is giving you gains of almost 8% right now. So big moves coming in on Majesco as well this afternoon. But let's get back to some of the long-term fundamental ideas. Tahir, a couple of the stocks that you have in your portfolio include some of these capital goods names, the likes of Thermax, etc. That's a stock that features in your Focus Midcap 30 fund. We were speaking with the management of Thermax earlier today, and he did point out that there is no improvement at all in the capex cycle. In fact, orders are slowing down quite a bit. Would you be a bit cautious on stocks like these now, or would you still be keeping the faith?
So it still reflects in our portfolio, and therefore to that extent we still continue to believe in it, while of course the stock is not really done as well as one would like it to have. But I think that's been the wait period as far as industrials go. We are kind of happy to have actually waited out enough in some of the names which we think from a recovery perspective will be probably better placed, and they are relatively less cyclical or shallow cyclicals, if I were to use that term. There are certain, while I know that the key order books are not reflecting as much of growth in the last few quarters, but some of the new opportunities in terms of the refurbishment of power plants on account of pollution control requirements, etc., do open up newer opportunities for the company. Besides, we kind of derive strength from the fact that it's a better position in some of the short cycle orders in some of the important segments where they are present, and they are kind of a market leader. So I think it's about a question of revival of capex in some segments like cement, chemicals, etc. If that were to happen, then the whole captive segment of the market will probably also start moving up. So I think we are holding on to that faith and the fact that we are in a better quality balance sheet compared to probably others. It does feature in our portfolio, although with a slightly lower allocation than the average. And as and when we find the right opportunity, and we see the right configuration and circumstances, we would probably not mind taking up the weightage in this name going forward.
Okay, by the way, the stocks that are surging now are the sugar stocks. Once again, I spoke about Dwarikesh, which is done for the day because of circuit, but there are others participating in the run now. Look at Aud Sugar. That's Shri Renuka, the stock up about 4%. Some of them are only on the BSE, but that's Aud Sugar up about close to 10%. Rajshri Sugar, I think that would be only on the BSE. That stock has seen a big intraday surge, so there also you have seen a big move. So a lot of these sugar stocks, clearly, Dwarikesh stands out because that's the one where you've seen the biggest gain. Dalmia Sugar and Dwarikesh stand out because both of them have been multi-baggers, but some of the other ones are also seeing a bit of a rally. Well, just about 2 minutes left for markets to close. So let's do one thing. We'll just do a quick recap of the market and then get back to our guests on some of these stocks which are moving. It's been nothing kind of day actually today because the market had a gap up that was sold into. Later on you had one buying, and towards the end again there was a bit of an intraday decline. So all over the place. Stock of the day today was clearly ICICI Bank. That was up about 3.5%. In terms of price volume, clearly that stands out, though in terms of overall turnover, Tata Motors was the biggest one, so 3.5% higher. But both these stocks did remarkably well today. KN has been the stock of this month, up 28% now this month, including the 3% gain that it had in today's trade. Tech Mahindra was up 3%, Vedanta, Hindalco, Ambuja Cement. So a lot of commodity stocks did well, Tata Steel as well. ITC and Lever did well in trade, so that's also positive. Axis Bank was higher by about 1%. What was down? Kotak Mahindra Bank was down about 1.4%. TCS was down about 0.5%, Larsen & Toubro was down 0.5%, and Infosys was down 0.25%. Coal India optically down, but technically it was up because the dividend was 27 rupees and the stock was down 22 rupees. So adjusted for that, actually the stock had a decent day, up about 1.5%. But all in all, as I said, nothing kind of day. And for the mid caps as well, the bet was even Stevens, 1:1.
Yes, there was not much action in the mid-cap space, just a few stocks moving around here and there. Saskin Communications was one of the big gainers today on the back of the settlement that it won with Spreadtrum. So Spreadtrum will be paying about $45 million to Saskin Communications as damages on the settlement, and that stock surged about 20-odd%. MIC Electronics also surged in trade, almost about 18-odd% or so. The volumes were high over there. Crompton Greaves up about 6-odd%. Huge volumes getting traded over there. Manappuram General Finance up about 4.5-odd%. The management was quite confident when we spoke to them earlier in the day, and a couple of other stocks like Motherson Sumi as well closed in the green. In terms of stocks that hit new highs today, there was Dwarikesh Sugar, as Anuj was pointing out. Dalmia Bharat Sugar also hit a new high today. So did Aud Sugar. Aud Sugar hit a fresh high and 13% gain on that stock. Marico hit a fresh 52-week high as well. That stock is now 250 plus. And you have a couple of other stocks that did well. On the downside though, you had JSPL that was down about 5%, JP Associates was down about 4%, all your usual suspects, Unitech, GMR, Lanco, SAIL, all down about 1 to 2-odd%. Suffice to say, today was a day of consolidation for the markets. Yes, we moved we had a lot of volatility intraday, but give and take everything, it's a good day for the bulls because we managed to hold on to our gains of last week, and we managed to put on some more weight in some key sectors like the banks. In fact, the Bank Nifty up about 0.7%, and big moves coming in on names like ICICI Bank, etc. So good day for the bulls today. Ashwini, what would the prognosis be for tomorrow? The trend will continue to be upwards, you think, and you should be positioned on the long side?
See, the important takeaway today is that a strong level did not violently get rejected. I mean, we had a decline, but a very mild kind of decline. So that means that probably the resistance on the upside is weakening a bit. So I would not give up on this breakout theory as yet. But basically, see, next time around, possibly the market will have an easier time of getting past 75.50, 75.70. In case you have any sort of gap down for any reason, you would buy. And my sense is that slowly the resistance at 75.50 may actually be coming down.
Okay, having some problem with Ashwini's video, so we'll just repatch that. But Sudarshan, a word on Tech Mahindra, that had a fairly vicious bear market, but it's bouncing back now.
It is, but it still remains the most underperforming of the IT stocks. So the small rally we have seen is just perhaps a relief rally. A lot of the other stocks, for example, Infosys, are giving us a large, see, after a big rally they are accumulating, or rather re-accumulating, but that's not happening with Tech Mahindra. So I would stay away from the rally that it shows now.
Okay. Tahir, the two stocks that have had the biggest run this month, one of them is Tata Motors, which is up almost about 25 or 20% for the month, and the other one is ICICI Bank, which is up 20% as well, almost. Which one do you think has offers a better opportunity now?
Well, I think again, we don't really own any of these stocks, but in our portfolios today. But I think Tata Motors clearly, the base has the China effect already built in for them, and therefore to that extent, their numbers would probably look a little better compared to what we have seen in the whole of last year. In fact, this year's number itself at nearly about 14% year-on YTD growth is actually not a bad number compared to what the market started off expecting and were kind of believing would be a flat to a negative year during the course of the year. So I think the story which was likely expected to unfold in Tata Motors last year is probably finally kind of unfolding in now, and probably will can get a little stronger in the year going forward. The good part is that some of their new launches are clearly making decent moves, and not just in China, but more importantly in the other markets. So actually it takes away a little bit of the China risk from them in a way. Besides which, of course, in the last 2 months even China has started to kind of register decent double-digit volume growth for them. So I think all in all, some part of the story which was likely to unfold some months ago or some quarters ago is actually now unfolding in 2016. So I would reckon that they have momentum on their side, and probably the base effect also will help them. The key to watch will therefore be their profitability picture, and if that is also comforting in this quarter and maybe the next quarter, by which time one will have a fairly decent hang on what their China profitability is like, then I think there's good possibility for the stock to make further advances.
Okay, Tahir, since you have Interglobe in your portfolio and a sizable quantity, did you buy the argument of the management? Do you think the market would want to believe it on face value? Has this put a bit of a floor for the stock? Your take on Indigo stock right now?
Well, I mean, from the point of view of whatever we've seen in the sector as well as in the company, I don't really think our thesis has kind of dramatically changed since the time we bought in. So while the stock has been exceedingly, has had its own trip up and down, but I think we bought it with the initial premise that the industry is having decent tailwinds, both in terms of demand as well as in terms of cost factors. I think that is still in place, and we still think that the business model of the company per se is in line. There was this whole, the only disappointment, if at all, was probably on the marginal delay that we saw in terms of addition of fleet, but I think even that is now kind of resolved, and we still see they being the best placed in terms of being able to actually absorb new demand when it comes in, and as it is coming now, versus various other players in the industry today in terms of availability of capacity. So I think from our point of view, while the stock has been dramatically volatile, probably up 40% and then down, but really hasn't changed our thesis since the time it started, so as to be able to actually create any major change for us from the point of view of its position in the portfolio.
Okay, gentlemen, thanks for staying with us through the course of the last 1 hour. We need to take a break on that note, with the note that the market has ended in the green for the first day of the trading week. So not bad at all. 7,500 is held quite well, and so is 24,800 on the Sensex. We will take a break on that note, but coming up,